Why did Nvidia close Wednesday at the lowest price of its entire month, in a week when it announced two of the largest commercial deals it has made all year? No earnings miss. No guidance cut. No regulator at the door. That same Wednesday afternoon, Kevin Warsh held his first press conference as Federal Reserve Chair, and three of his own regional bank presidents voted against him, all three wanting rates higher rather than lower. Those two events are the same event. There is one number underneath both of them, and I will give it to you at the end. Amazon jumped 15% Friday after its cloud numbers landed, and the whole tape went with it. Friday, the final session of July, the Nasdaq Composite closed up 1% at 25,373.85. The S&P 500 added 0.7% to 7,489.72. The Dow gained 276.97 points to 52,485.03. That is a market pricing relief, pricing the all clear. Now hold that picture, because the other half of Wall Street spent the same afternoon doing the precise opposite. That other half is the part that reads the fine print. CNBC's own line-by-line reading of Warsh's prepared remarks reached an uncomfortable conclusion. Investors heard dovish, but the text reads like a man standing very close to raising rates. Same press conference, same afternoon, two completely different messages walked out of that room. Here is what actually happened Wednesday afternoon. The Federal Open Market Committee voted 9-3 to leave the federal funds rate at 3.5 to 3.75%. Fifth consecutive meeting on hold. The three dissents came from Beth Hammack in Cleveland, Neil Kashkari in Minneapolis, and Lori Logan in Dallas, and all three wanted rates a quarter point higher. Not lower. Higher. That is the most hiked dissents in nearly a decade. Dissents like that do not appear out of nowhere. They come from oil. Brent crude spent the week climbing toward $90 a barrel on Strait of Hormuz tensions tied to the conflict with Iran. Headline PCE inflation, the Fed's official gauge, did cool 4.1% in May, 3.7% in June. Still nearly double the target. And now walking straight into an energy shock. Now the earnings half of the board. Of the roughly 300 S&P 500 companies that had reported by Friday, about 85% beat expectations. Microsoft and Alphabet delivered. Apple did not. Services revenue came in soft, China's sales came in softer, and the stock fell 7% Friday. Meta disappointed too. So this was never a broad technology failure. It was a sorting. Behind that sorting sits one enormous constant. The four largest cloud providers, Microsoft, Amazon, Alphabet and Meta, now guide to somewhere between $720 and $745 billion of capital spending in 2026. Nobody trimmed. Nobody blinked. If that were the only fact you had, you would assume the company selling the picks and shovels had a spectacular week. It had the opposite. Monday, Nvidia fell more than 5%, closing near $196, its largest single-day drop since February. No earnings that day. No guidance cut. No regulator at the door. What hit the tape that morning was, on paper, good news, two of the largest commercial announcements Nvidia has made all year. Which is the part that should make you sit up. Nvidia and South Korea's SK Group announced an artificial intelligence cooperation agreement valued at more than $500 billion. Separately, Nvidia was reported to be negotiating up to $250 billion in lease guarantees supporting an OpenAI data center in Ohio being developed with SoftBank. Read that word again. Guarantees. Not sales. Nvidia putting its own balance sheet behind the buildings its customer will rent. That is what traders mean by round-tripping. Capital leaves the chipmaker, funds the customer, and comes back as chip revenue. Portfolio manager Gary Tan put it carefully, the investments and partnerships reinforce confidence in the long-term AI build-out, he said, but investor concerns over round-tripping finance remain. The demand is real. The open question is how much of that demand Nvidia is quietly financing itself. And here is where it gets genuinely strange. The credit market answered before the stock market did. Nvidia's 5-year credit default swap, essentially the cost of insuring its debt, jumped roughly 0.14 of a percentage point Monday, to about 0.82%. The biggest single-day move since that contract began trading actively in November. Nobody is predicting a default. Professionals are simply raising the price of being wrong. Wednesday, Fed Day, Nvidia closed at $190.01, the low of the entire month. Not a coincidence. Rising long yields compress what anyone will pay today for profits that arrive years from now, and Nvidia is priced years from now. The Fed's inflation problem and Nvidia's financing problem landed on the same stock on the same afternoon. Then Friday flipped the whole thing. Nvidia closed at $200.75, higher on the day and well off the low. Amazon's 15% surge pulled the entire complex up with it, because Amazon's cloud numbers were the cleanest evidence yet that AI capital spending is converting into actual revenue. For one session, the equity market decided the financing question could wait. Wait until you see what the bond market did with the same information. It went the other way, and it went there loudly. The 30-year Treasury yield pushed above 5.2% Friday, the highest in 19 years. The 10-year finished above 4.7, its highest level since January of 2025. Yields climbed alongside crude, and several Fed officials said publicly that they favor raising rates to slow inflation down. Sit with that sequence. On the last trading day of July, stocks rallied while the people who set the price of money were openly discussing making money more expensive. The monthly scoreboard shows who has been right so far. Across July, the Nasdaq fell 3.2%. The S&P 500 slipped 0.1%. The Dow rose 0.3%, its fourth straight winning month. Nvidia itself finished the month down about 2.5%, high of 214, low of 190. Weekly gains, monthly losses. That is not a rally, that is money changing seats. So, Monday, 10 a.m. Eastern brings the ISM Manufacturing Survey, the earliest clean read on whether all this AI construction is finally showing up in factory orders. After the close, Palantir reports, with revenue expected near $1.8 billion, up about 80% year over year. Palantir is the software check on the whole story. Is anybody actually using this stuff? Tuesday brings AMD, expected around $11.2 billion, up roughly 46%, the cheapest available second opinion on data center demand. Then Friday morning at 8:30 Eastern, July payrolls. Consensus sits near 87,000 jobs, after June printed 57,000. Under 100,000 in September rate cut odds jump. Above 150,000 in yields grind higher again. Nvidia itself does not report until August 26, guiding to about $91 billion for a quarter that already ended on July 26. Which leaves the number I promised. In June, headline PCE inflation ran 3.7%. Core ran 3.3%. But trimmed mean PC, the gauge Warsh personally favors, after dismissing the standard index as a rough swag, read 2.2%. Same economy. Same month. Stocks are trading Warsh's number. Bonds are trading the Fed's official one. Monday, one of them starts being wrong. That's the story. If you'd watch one more like this, hit subscribe and I'll have another ready soon.